Hello. Okay, in this lecture we will discuss that how we can combine our Elliot Wave theory with the smart money concept and take a confirmed trade. We know that when we talked about Elliot Wave, we know that we count one, two, three, four, and five waves towards the upside, and also we have ABC as a correction. Now this is the overall structure of Elliott wave, and we discussed that where are the areas of our interest. So I actually gave you the areas where I take the trades. So I try to long it here at wave 2 for wave 3. I try to long wave 4 for wave 5. Also I try to long wave B from wave A, and if there is any wave remaining, in case I try to long C as well for the to catch the next move towards the upside. So these are areas where I try to long it. And where are the areas that are short areas, or where I am interested to short the market, I will just highlight it in red. This is just repetition. We already know about it. We have discussed about this in the previous lectures, but these are the areas where I try to short the market. Now, if you look here, uh, when we talk about, I have taken here an example of AXS. These rules apply to all coins. It's not limited to any specific, but one thing we discussed was that we always search for those coins that are creating very clear wave structure. We do not trade those coins that do not have a clear wave structure. So here, if you see, this is AXS and we are looking at 1 week chart. Even if you go down to, let's say, 5-day chart, still it should be very clear. So we can very clearly count 3 waves towards the upside. I will just mark it here. So this was wave 1, wave 2. Wave 1 is always a weak wave and I never trade it. That's the reason I don't trade it. So wave 2, then we have wave 3, we have wave 4, and lastly we have wave 5. So if you see this with this structure at the top, you can relate it to this. So 2, here is 2. This is the area where I try to long it. Wave 1 I never trade. I discussed this before also. Reason is that wave 1 is always unclear, a very weak wave. I don't like to trade wave 1. But we can trade wave 2, we can short wave 3 to 4, and we can long wave 5. Now we are here at this structure where ABC is remaining. Now if you remember, we discussed about ABC structure as well, that what is the wave structure inside ABC. And we know that A always, most of the time, A contains 5 waves. So 1, 2, 3, 4, and 5. And inside B, we have 3 wave structure, that is ABC again. So inside B, we always have 3 waves, whereas A most of the time contains 5. It can be 3, 3, 3 structure or 3, 3, 5 structures. We discussed this in the lecture where we discussed about different variations in the corrective pattern. But this is most of the time the case is that A makes 5 waves towards the downside. It can make 3 as well. Just keep this in mind. And then C always contains 5 waves. So we will have 1, 2, 3, 4, and 5. So this is the structure of ABC. And we also know that each motive move towards the upside contains 5. The corrective move will contain ABC 5, ABC 5, something like this, right? So it's just, I was just trying to repeat it. So if you compare this structure with the structure above, you can very clearly see that we have created 1, 2, 3, 4, and 5 so far. And now most probably we are creating A structure. But if this is A structure, there has to be 5 wave inside. So this is 5 days chart. Let's go to 1 day, because I can clearly see wave structure here, but I would like to go into more details to see clearly the waves 1, 2, 3, 4, and 5. So I will go down to 1 day chart to see some more details inside. And as you can see here very clearly, sometimes it's easy to count the waves when the chart is upside. So if you see here, based on my experience, I can very easily count this as 1, 2, 3, 4, and 5th wave is in making. But in case you find it difficult, you can right click here on the right side on the time scale and just invert scale. So the chart will be inverted. Now if you see, it's inverted chart. And as it is inverted chart, now it's easy for me to count waves here because the chart is inverted, and you can clearly see here three wave structure. So we have 1, 2, 3, 4 and 5 is in making. Let's just turn this color to something else. Let's just turn this to a different color. I'll just choose the purple. And as you can see here that the last fifth wave is in making. Now let's just correct the chart again. So we have the 5 wave structure in making. So most probably we are creating A here right now. Now how we can combine this with our theory? Our strategy is that we want to see a 5 wave structure, and we want to see RSI divergence, bullish or bearish. In this case, because we are moving towards the downside, we want to see a bullish divergence in RSI. Now what is RSI divergence? As we discussed that RSI will always, let me just change this color to black. So we discussed that RSI will create a higher high for this, and then for the next wave also you will see a higher high for RSI. But for the last wave we discussed that RSI should create a lower high, and that's where we will become interested. Similarly, what was the next indicator? We discussed about MACD, if you remember. So MACD, we said that MACD will similarly create the histogram. So we want to see histogram ticks for wave 1, then the MACD will go to the opposite side, then MACD will come back, and for wave 3 it will create a higher histogram structure, and then you will see wave 4 again MACD going towards the opposite side. And lastly, we want to see the last wave, but MACD will tick lower. You will see a lower histogram tick. So this is our confirmation of taking the trade. So this is what we want to see in case of bearish divergence. So bearish divergence is that the price action is creating a higher high, but we see a lower high on RSI and lower high on histogram or MACD. And now in the last lecture we have discussed about smart money. So it will be great if we find some order block in the area where we are finding these confirmations as well. So that will be 100% confirmed trade. So let's try to find out, and let's try to see that do we have any order block in here that we can trade, and as the price is approaching there as well, so that we can even know that from which area the price can react. So I will just go down to, let's say, 1 week chart. I love the order blocks that are on 1 week. Those order blocks are always very, very strong order blocks. So let's just refresh it. Let's try to see any down candle, last down candle before the up move. So we can clearly see here this candle, that is last down candle before the strong move towards the upside. And let's just try to see that has this this order block fulfilled all our criterias or not. The first criteria was that it is the last down candle before the strong push towards the upside. So we have here seen that there is definitely a down candle before a strong push towards the upside. So smart money definitely got involved here. Now what was the second thing that we want to see in the order block? Has that push towards the upside broken any structure? So we can clearly see here that the structure was broken. So this was the high here, we call it break of structure, so boss. So as you can see, it broke the structure towards the upside, so definitely it's a valid order block. Now if you see here, the price is approaching this, in fact has reacted once from here. If you would have taken a trade, it's still a good trade. I mean, it was a good scalp. How much was this push after the reaction? You got 19% push. So see how strong this push was from this order block. So we already have got a great push. But why I'm saying that I'm still waiting, because I think that the waves, 5 waves have not completed yet. Let's go to 1 day again to see more details. And if you see here, I told you that each impulse, each motive wave can be subdivided into 5 waves. So that's how we say that this is a valid structure. So if you see here, I would further go down to 12 hours to see more details. You can do this also, and let me just again turn this or invert this so we can easily count the waves. So as you can see here, I will just count 5 waves in every structure. So we can clearly see here we have 1, we have 2, we have 3, 4 and 5. This creates wave 1. I'll just turn the color to orange so that we can differentiate. Now when we talked about wave 3, can we count 3 waves? So this definitely was wave 1 because it did not retrace 100%. This was wave 2, and here we have 1, 2, 3, 4 and 5 structures. So somewhere here was wave 3 top, right? So let's move this here. And if we see here the last wave, can you count 5 in there? Well, we can't. I definitely see 2 waves in there. So if you count this, we clearly have wave 1 here, 2, 3, 4. So I'm expecting one more wave that is still remaining, and that will be the area that will be inside our order block. Of course, you can just trade based on the order block. Of course, people trade this, and if you were trading based on the order block only, this was the area. So we definitely have a 20% push towards the upside. So it's a great scalp already done. But I will still wait because why I am waiting, because I am waiting for wave B to form. As you can see here, if I go back to, let's say, 5-day chart just to see the overall structure, you can see here that we have 1, 2, 3, 4 and 5, and this most probably is A in formation. So this will be A here. We need to have a B, and then we will have a C structure. Now if this is the end of A, that means once the 5 waves are completed, we will expect a structure of B. So for B, you will definitely have, you can have a 50, 60, 70, 100, even a huge push towards the upside. So that will be a long trade here if we manage to catch the last wave here. But we will see the price action, of course, because in ABC we know that we have 3 waves. So we will see 3 waves formation. Once that is about to done, we will exit the market. And once that is completed, we will take a short position here from B to C. So we'll count 1, 2, 3, 4 and 5. So definitely this will be the area where I will be interested in taking the short position as well. But this area right now where we are, I am expecting to have a long position here. So this is the area where I'm expecting the price to come, and then we will take a long position here. So one wave is definitely remaining, and this is the order block. So this is how I combine order blocks with my Elliot Wave theory or Elliot Wave strategy, so that I am more confirmed that where is the area from where the price can just react. Now let's see the indicators also. Do we have indicators that are diverging as well? I will go to a lower time frame to see more details here. So let's just combine this with the indicators as well. So I will just open up the indicators. As you can see, this is RSI, this is MACD. And if you see the waves, we have wave 1. So I will just highlight it. So here is wave 1. And if you see, this is the area of wave 1. So here. And when wave 3 formed, we had a lower RSI, right? And now we are here. Now why I am saying that there is still a wave remaining? Well, if we zoom in to this structure only for wave 4, and we have 3 waves inside, of course. So we have already completed wave 1, 2, 3, 4, and there is 5 remaining. Now why I am so sure that there is wave 5 remaining? Well, because I don't see a divergence in RSI so far. As you can see, wave 1 here, wave 1 here, right? Wave 3, and wave 3 made a lower low. So what we are expecting is that the price would go up, and on RSI you see a higher low, and that is where we will see a bullish divergence. The price action will be making a lower low, whereas the RSI will make a higher low. And also MACD will come from here, and here we will see a lower tick on MACD here. So we'll see a bullish divergence on MACD, a bullish divergence on RSI, and price action making a lower high. So I hope this makes sense, and in the next lecture, that will be a bonus lecture, I will explain you how I draw targets using my Fibonacci extension. So let's move on to the next lecture and discuss about the Fibonacci tool.